Hi traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. If you are struggling to analyze currency pairs effectively, you might be missing key steps that separate beginners from experienced traders. Okay, so in this video, I'm breaking down how to analyze currency pairs the right way, step by step. By the end of this video, you'll have a solid grasp of how to identify strong and weak currencies, use technical and fundamental analysis, and make smarter trading decisions. Let us dive right in. But before we get started, make sure to hit that like button, subscribe, and turn on notifications so you never miss an update on Forex trading strategies. First things first, what exactly is a currency pair? Now, in Forex, currencies are traded in pairs, meaning you are always comparing the strength of one currency against another. For example, this is the AUD/USD, meaning we are comparing the Australian dollar against the US dollar. This is the GBP/JPY, meaning we are comparing the Great Britain pound against the Japanese yen. This is the XAU/USD, meaning we are comparing gold against the US dollar. This is USD/CAD, meaning we are comparing the United States dollar against the Canadian dollar, and so on. All right. Now, the first currency in the pair is called the base currency. I'm just going to write this out so it's going to be clear. All right. Just give a gap. So, in this pair, this USD/CAD pair, this first currency, the first currency in the pair is called the base currency, while the second currency in the pair is called the quote currency. Okay, so in the USD/CAD currency pair, the USD is the base currency while the CAD is the quote currency. All right, and if, for example, the price of USD/CAD is, let's say, 1.4, for example, it means that 1 USD is worth 1.4 CAD. Okay, so there are three main types of currency pairs. We have the major currency pairs like the Euro/USD, that is the Euro against the US dollar. We have the GBP/USD, we have the USD/JPY, and so on. Then we also have the minor pairs like the Euro GBP and the AUD NZD. And we also have exotic pairs, which include currencies from smaller or emerging economies. Now, let's talk about technical analysis. This is where traders use charts, indicators, and historical price action to predict future movements. Here are the key elements you need to focus on. The first is price action. Now, price action refers to how a currency pair moves on the chart. Analyzing candlestick patterns, support and resistance levels, and trend lines helps traders understand market sentiment. All right. Now, the second point is indicators and tools. Right. Popular indicators like moving averages, RSI, MACD, and so on. Okay, we have a whole lot of indicators. These indicators help traders confirm trends and identify potential reversal points. And the next is correlation analysis. Now, some currency pairs move in the same direction while others move in opposite directions. For example, the Euro/USD, and GBP/USD often have a positive correlation, meaning when one goes up, the other tends to follow. For example, let me just put both currency pairs on the 1 hour chart, and we are going to look at both. Can you see that the Euro/USD had a sort of declining pattern, and then we had this latest bullish move. And look at the GBP, same scenario. Can you see that? Same scenario. So we call this a positive correlation. They are both positively correlated. Okay. Now, technical analysis is powerful, right? But to truly understand currency movements, you need fundamental analysis as well. This involves studying economic indicators and global events that impact currency strength. The first is economic reports and data releases. All right. Key reports like the GDP, inflation, or CPI, right? Employment data like the NFP, and interest rate decisions can cause major price movements. Okay. Secondly, central banks and interest rates. When central banks like the Federal Reserve or the European Central Bank adjust interest rates, it directly affects currency value. Okay. Higher interest rates usually strengthen a currency while lower rates weaken it. Then we also have market sentiment and geopolitical events. Now, global events such as political instability, trade agreements, and natural disasters can influence investor confidence and shift forex markets. Okay, so how do you know which currencies are strong and which are weak? Now, here's a simple approach. The first is to look at the trend. All right, look at the trend. Is the currency consistently gaining or losing value against others? You should ask yourself that question and you should answer it appropriately. All right. Secondly, compare interest rates. Currencies with higher interest rates tend to be stronger. All right. Currencies with higher interest rates tend to be stronger. Finally, follow economic data. Strong economic growth supports a strong currency. All right. So by analyzing these factors together, you can determine the best currency pairs to trade at any given time. All right. Now that wraps up our guide on how to analyze currency pairs like a pro. If you found this video helpful, make sure to smash that like button and subscribe for more expert forex strategies. Now, before we close, I'm just going to also, just briefly talk about risk management. Now, after doing your analysis, when you are ready to execute trades, take note that risk management is paramount, okay, irrespective of the strategy you were using, because it is one thing to know fundamental analysis, is another thing to know how to execute trades based on technical analysis, and it's another thing to know how to manage your risk. All right, so if you are, if you're up to date with economic events and all of that, the fundamentals, and you've learned how to, carry out your technical analysis appropriately, another thing you must know is how to manage risk. Okay, so ensure that you do not over leverage, ensure that you do not risk more than 2% of your account in a single trade, and ensure that you always observe good risk to reward ratio for your trades. All right, so drop a comment below and let me know what strategy you use when analyzing currency pairs. Okay, in the meantime, thank you for watching and I hope to see you in the next video.